Well, folks, welcome to the Financial Sandbox. Finance can be messy, but don't worry. We clean it up with facts, fun, and maybe a little sarcasm here and there. Let's get into it. Today on my show, I have Spencer Goodrich. Now, Spencer and I met, what is it, about 18 months ago?
Yeah. It's a couple months, about 18 months ago, almost 2 years now.
Yeah, it's almost 2 years. And this year we're trying to get some new marketing together. And Spencer, you're in insurance. So tell me a little about your company, where you work, and what makes it special for you. So give me some intro to yourself and your company.
Yeah. Herb, thank you. First and foremost, thank you for the time, and thank you for having me on your show. I truly appreciate it. This is an honor. And just a little bit about me. Again, my name is Spencer Goodrich. I currently work with Forbridge Financial. I am what we call a financial service wholesaler. So I work with financial advisors throughout the Northern California region to help their clients protect their retirement assets. So specifically, I work with financial advisors to help provide guaranteed income for their clients in retirement, as well as just providing protections around their retirement assets in general. And I've been in this business or in this industry for about, I believe a little over 11 years now. First started off at my career off at Nationwide Insurance in Columbus, Ohio, which is where I grew up. Hopefully you've got some Ohio State Buckeyes who listen to your show, who watch the show, but in this OH, they'll know what I'm talking about. But
Ohio may be where you grew up, but it's we have kind of a West Indian link, don't we?
Yes, actually, I was born in West Africa, Liberia, West Africa, and migrated to the U.S. as a little kid. I believe I was 7, 8 years old at the time. Lived in New York for a little bit, and then my family and I moved to Ohio, which is where I grew up. And then I got the chance to move out to Northern California not too long ago. But have bbeen enjoying it ever since. And being in this business, being in the financial service industry, in this role. Kind of things that one of the things that drive me is I think back to when I was in high school, my junior year in high school, unfortunately my mom passed away, and at that time I saw my dad do everything he could to keep our family afloat. My mom had several small term life insurance policies that she passed along to my dad and to my siblings and I. And for some reason, that really struck me. And I wanted to make sure that as I grew up and I found myself in this industry, I wanted to make sure to help advisors, help their clients not have the same experience that my family and I had when my mom passed away. So that's one of the things that really drives me since being in this business.
Well, sorry to hear about losing your mom. I lost mine just a couple years ago, so I understand that pain. Let's talk about life insurance, long-term care. I get people call me all the time. I think my brother wants to kill me. But as he's trying to figure out IUL, VUL. Let's start. What if you're just a stranger walking into an office and someone says, "What's the difference between an IUL and a VUL?" What's the key difference there?
So that's a great question.
And I'm sorry, I used acronyms. So why don't you describe the acronyms too? I try not to do that, but go ahead.
Yeah, right. So one of the things in our business, right, we use acronyms all the time. Right? So we use financial service lingo all the time. For those of you who aren't familiar with the terms IUL or VUL, IUL is an index universal life insurance policy, and VUL is a variable universal life insurance policy. Both of those are permanent life insurance policies. So think whole life compared to term life insurance, where you're a policy for a certain amount of years, then it kind of goes away. So those two policies are permanent life insurance policies. Index universal life insurance policies, or IUL, are tied to an index. So typically the S&P 500 or another index that's out there. It's usually much lower cost to the person purchasing the insurance product or insurance policy. But again, it also offers permanent life insurance. It also offers the ability to grow your not necessarily your death benefit but your cash value. That could also be tied to your death benefit, but you can take out as out for retirement income or take loans against that cash value. Variable universal life insurance policies are similar, but those are invested in what we call sub-accounts or mutual funds. Those are a little bit more expensive because of the underlying expenses for the sub-accounts or the mutual funds within the life insurance policy. But those two are designed to help grow cash value within the life insurance policy for future use, either as a death benefit to your beneficiaries or to your heirs, or to borrow against or to use as some form of retirement income or retirement assets, if that makes sense. Hopefully I made that clear.
Yeah, it does. So let's say I've got $5,000 and I'm selecting either index universal life or variable universal life. And I want to say maybe increase by $2,500 a year or $5,000 a year. Maybe I'm a general contractor. I'm a gig worker, right? And I want to start that account. Where would you advise someone to? What kind of product would you advise them for, or would IUL and VUL be totally out of the ballpark?
Yeah. So it depends, right? So first thing that I will say, because of the nature of my job and the company that I work for, I have to throw out this disclosure. I can't give out advice, right? In this sense. But that being said, it depends on that particular individual, their risk tolerance, their specific insurance needs, their investment needs. One or the other could work in their particular situation. Again, both are going to provide cash value accumulation. Both are going to provide protection, death benefit protection. So it depends on their risk tolerance. So again, that's a universal life policy. It's going to provide a little bit more of more predictability, I guess, because it's tied to an index. Whereas the variable universal life insurance policy is going to be tied to the mutual fund or the sub-accounts that's built within them. So those are going to be a little bit more volatile. So clients are going to, that individual who's looking to invest will need to understand that whatever is in that variable universal life policy is going to fluctuate with the market. So they're going to have to be comfortable with that, right? So again, depending on their risk tolerance and their 5, 10, 15, 20-year outlook, one or the other could be suitable, right? So what I typically tell individuals, if you are interested in a policy like that, whether it's an index universal life policy or a VUL policy, or even an annuity, and I'm pretty sure we'll talk about that here in a bit, but talk to a financial advisor, right? If you know one, great. If you have one, great. Have a conversation with your financial advisor. If they haven't brought it up yet, take that conversation to them. And they should have the tools and the resources to be able to adequately provide you that advice or those recommendations.
That's quite a bit of information on universal life. So real quick on this, let's stay on this really quick. If I'm 50 or if I'm 30 or if I'm 60, where should, and I'm 30, I haven't thought about it. Obviously it's important, but if I'm 50 or if I'm 60, what should I be concerned with on opening an IUL, VUL? Is it too late?
The best time to buy life insurance is probably when you're young, right? So
it's cheap.
Exactly, it's cheap, and most people are at the healthiest that they've ever been when they're much younger, right?
Right.
Qualifying for life insurance, you will have to go through, your medical exams. Insurance companies will, pry through your medical records, right? One of the things, it gets a bit about my background. When I first started off at Nationwide way back in the day, I was a life insurance case manager, right? So one of the things that I did was I took life insurance applications in from financial advisors, from insurance reps, and took it through from beginning to end. So from when it came in through underwriting to when it got approved and got back out to the advisor and the client. So I got a chance to see what it took for an individual to get approved for insurance, life insurance. So the your medical history, your health outlook, your family history, all of that comes into play when getting approved for life insurance. So the earlier, the better, because again, it's going to be much cheaper for you, and you're going to be in much better health to qualify. But to your question though, whether if it's 30, 40, 50, 60, there's no better time than now. If you don't have protection, the time to get protection is now if you don't have it, right? So whether you're 50, 60, 70, right? If you don't have the protection, find some sort of protection now. And that's not only that's more so to protect your loved ones. Again, from my personal experience, my father, growing up, we didn't know, right? We didn't have these conversations when we were young. My dad and my mom, I never saw them having the conversation around life insurance or financial planning. And then when my mom passed away, it was kind of a shock to all of us, and we weren't prepared. And my parents didn't have the adequate protections in place to really to set us up to withstand that loss of income for the next 15, 20 years, right? So again, it doesn't matter where you are at the moment. If you don't have protection, I'd encourage you to get protection, whether if it's term life insurance. Those are going to traditionally be the cheapest, or universal life insurance, whether it's an IUL or VUL, or some sort of whole life insurance. So doesn't matter your age at the moment. If you don't have it and you need it, I'd encourage you to get it.
Right. So we're both people of color, obviously. What about our communities? And I see always there's a perception of a lack of education, and I sit down with, whether it's the Black and brown community, Latino community, the Asian community, the Native community, it's always a struggle to have that conversation. How do you have that conversation when you're working with communities of color? Where do you start?
So that's a great point. One of the things that I've come across, in communities of color, traditionally we don't like talking about that. We don't. It's a huge taboo, right? Yep. It's something that we don't like doing. And in our business, we have to have that conversation, right? We have to have that conversation to better plan for the lives that we have today, right? To help prepare our clients for the lives that they have today. And that's one of the things that I've seen in communities of color. And the way that I have tried to have that conversation going forward is that letting individuals know that, look, times are different, right? The communities that we had 30, 40 years ago, and being in West Africa and come from a huge community, everyone took care of each other. And even now, if you have someone that unfortunately passes away within the community comes together to help take care of them. But that's becoming less and less of a thing, right? Being where we are today, we don't have that support system, and you need to be making decisions now so that when that time comes, unfortunately, we're all going to have to go at some point. It's inevitable, right? Two things in life: death and taxes, right? It's going to come, right? Yeah. It's no use avoiding it. But because we don't have those support systems anymore, right? We've kind of culturally we've moved away from that. We need to start making those decisions, having those conversations now to be better prepared, so that when those events happen within our families, within our communities, we're not passing on debt, we're not passing on trauma to the next generation. Right. That's for me has really resonated with the folks that I've had conversations with within my own family, within my own community, and those are things like that have helped us take steps to protect ourselves. Even me being, I'm going to be turning 40 here in the next 4 or 5 months, but having that conversation with my wife and I have had that conversation. We put plans in place that, God forbid something were to happen to either her or myself, our kids would be protected. They would be set up. Had that conversation with my dad, who's fortunately he's still with us. But again, especially the experience that we had initially when my mom passed away, we wanted to make sure that he was protected, and that because myself, my siblings, and I are helping to take care of him now that he's retired and is living out his golden years. We wanted to make sure that he's protected, and that financially, when that time came, we wouldn't have the full burden of his final expenses. So again, it's not necessarily it's not tapping into that taboo topic that we've all been scared of in our respective cultures, but it's how do we better protect our next family? We protect the next generation, right?
Yeah, the next generation, exactly.
So that has really resonated with the folks that I've had the pleasure of having a conversation with.
Yeah, it's the same in my family. With my mom came here from Honduras, and the rest of our family from Nicaragua and Jamaica, and we're having those conversations in this community is always difficult. But I try to have that conversation when I came into real estate. I'd get couples who are buying a home, and I would say, have you guys put together a living trust?
Yeah.
And they'd look at me, why would we need that? I said, well, you guys have now made your first big investment together, right? Something happens to either of you, you have children, whatever those circumstances are, it's so important to think that through and just take that step. And I think when we've lived through COVID, there are a multitude of stories. I had a friend who his dad had COVID, long distance runner, great health, and his daughter was off at school on the East Coast. Son is here. And when dad went into the hospital, they thought nothing was going to happen. We'll be good. And 2 days later, they were calling the daughter saying, you need to fly out.
Yeah.
And he was gone 4 days later.
Yeah.
And there were some things in place, right? But it was really unexpected. And so just like my mom had some stuff in place and some small life insurance policies, it's really something that we do need to talk about in our communities. Yeah. So when people talk about term life insurance and whole life insurance, what's the major difference? I know everybody says to me when I'm talking to them,
whole life insurance is really expensive. What's the difference, and why the price difference?
Yeah, so the price difference is because one's permanent and one's not, right? Term life insurance is that, right? You buy life insurance for a certain period of time. So whether it's a 10-year, 15, 20, 30-year term life insurance, and at the end of that period, life insurance goes away. Now, some insurance carriers or some policies will give you the ability to turn that term life insurance into a whole life insurance, and that's a completely different topic. We can definitely explore at a later time. But it's that, right? For that 15 years, you're paying that, what is $20 a month, whatever that amount is, for that policy, for that $100,000, $200,000, $300,000 face value death benefit policy, and at the end of that 15 years, you stop paying that $20 a month. That policy goes away, right? If you don't pass away within that 15 years, or you would have paid that money, for essentially nothing, right?
Right.
I don't say it's nothing, but because you were purchasing protection just in case something happened, right? We all have to buy car insurance, all have to buy home insurance, right? To protect us against, the possibility of an accident or the possibility of a fire. Moved out, just a sidebar, moved out here to California. Fire insurance is something that I've had to deal with, right? But
a little bit of shell shock there.
Exactly. You don't deal with that in the Midwest much, but we have to do these things just in case, right? Term life insurance is the same way, right? But at the end of that term, you don't have any more coverage. Whereas whole life, you have coverage for as long as you are alive, right? Essentially, and those whole life insurance policies have the ability to accumulate cash value that you can then borrow against, or use that cash value to fund your retirement income, fund college expenses for your kids, fund that home improvement project that you may be looking to do down the line, right? So those are the differences, and that's why there's a price difference, right? Obviously, if you're going to have that insurance policy for the rest of your life, it's going to give you access to borrow against cash value. It's going to be a little bit more expensive, right? Versus this is just a face value life insurance policy that I have for 15 years. Right. That's the only benefit that I have. Of course, it's going to be a little bit more cheaper than a whole life. So that's simply put, those are the biggest differences in term versus whole, and the cost difference between those two.
I think one of the key things you said about that, and I'd like to go back to it, is that whole life insurance policy you can use for a lot of different things: funding a child's college education, making that home purchase. Can you talk a little bit more about that and tell us how does that work? Because and I think our next interview will do some spreadsheets and some visual aids. But give us just a nut, because my audience here, we're just kind of teasing them.
Yeah, no, yeah, and that's a great point. It's the whole life insurance. Again, as you're paying your monthly or annual premiums for that policy, a portion of that premium is getting invested, right? It's whether if it's getting invested into a fixed rate of interest that you're receiving, or again, it's tied to an index in a index universal life insurance policy, or a VUL, right? That's being invested in the stock market that's growing, right? Then at a certain point, whether if it's again 5, 10, 15, 20 years from now, as that value is growing, you can either borrow against that to fund college education or whatever else, or you can withdraw that full cash value. Now you still have your death benefit value that's still in effect, right? So that never goes away as long as you're still paying your premiums. And in some cases, you can pay up. You can, if you've got enough funds to do so, you can pay up all premiums all at once or within a certain amount of time. So you don't necessarily have to pay month to month. But As long as you've got your premiums paid, right, your death benefit value will still be in effect or still be active. But that cash value that's been accumulating, you can then pull out of the life insurance, move that into another investment, or use that to again pay your kids' college tuition, or use that to buy your first home. Again, that's the beauty of these types of policies. It's another investment vehicle with an insurance wrapper around it.
Sure.
It's a tax deferred investment as well. So as you are growing your assets, or you're growing that cash value, and within the insurance policy, you're not paying any taxes, right? On that accumulation. Whereas if you're in a brokerage account, you're in a mutual fund account, and that your account's growing, you may be, subject to capital gains tax and whatnot on a yearly basis and whatnot. So again, an insurance contract, a whole life insurance contract, could be a tax efficient way to grow assets, and it could be another way to help fund retirement income. It could be a way to help fund other expenses down the line, tied to, again, an insurance, life insurance piece of your overall portfolio. One of the things that I'll say before we kind of move forward, but let's just say you don't use that cash value in your lifetime, and you die. That cash value and the death benefit then goes to your beneficiaries, right? So it's not.
That's a really great point,
right?
Because it's two big numbers that you're now helping to seed generational wealth.
Exactly. And that's one of the biggest things for our community. This is a great way to really start creating generational wealth. Life insurance is a great way to do that, because again, we may not be able to do that while we're living, right? Life insurance is a great way to give our kids, our beneficiaries of that next generation, a leg up, right? That's a great way to start to generate generational wealth for our community. And that's why I'm very, very passionate about what we do to get us to that next level.
I think it's so important. And the education piece for communities, especially the communities of color, and many communities have used insurance for that generational wealth for years. And it's really about education and opening the minds about this. There's other topics that we could talk about, from long-term care, right? And how those policies work. But today, I just kind of want to do that news at 11 teaser, right? In our first interview, because next time I'd love to get one of our audience members to email in and say, hey, what if I wanted to do a policy? Show me an illustration. And we might be able to do that in our next podcast and really show how it actually works. And I think that's the exciting part. And it's probably what really juices you when you're doing it. I agree. I think it's a great way to learn the power of this, of these instruments, these financial instruments, and how it can really transform an individual or family's life. I'm really passionate about it. Again, once I joke with the wife all the time that when I first got introduced to this business, this industry, I couldn't think about anything else, right? So I wouldn't say I'm very religious, but I do believe in God. I'm a Christian, and I do believe that I was put here for a purpose, and I have a calling. And when I found this industry and understood that this was something that I could bring to my community, I understood that this was my calling. This was the calling that God put me on earth to do, right? To be able to bring this to my community. Because again, when I was growing up,
looking at seeing my parents, my extended family, and my community at large. These weren't conversations that we were having, right? And then, in a sense, being immersed in this business, I've seen time and time again how this has changed the lives of other people, right? Other communities,
right?
And I want this for us as
well. Right. That's awesome. I mean, you can tell that you really are passionate about this and you love it.
I do.
Yeah. It's awesome. I think when we do I always feel like I have to love what I do because I can't fake it.
Yeah, exactly.
It's not easy. So, so whenever I interview people, I always take a couple minutes to have a little fun. So, Spencer does not know what I'm going to ask him here. So a lot of times I call this the boxers or briefs question, right? So, did you grow up with cartoons?
I did, yes.
Yeah. Marvel or DC?
Oh man, I gotta be honest. It was DC for me. Superman was my favorite superhero growing up. I'm glad you mentioned you asked that because that's a no-brainer for me. Superman, yeah. DC, it was DC. I mean, growing up, I really wasn't into I didn't just make a distinction between Marvel or DC, but I just really liked Superman and that whole world. And even growing up coming from West Africa, that was kind of the first superhero that I was exposed to. And I watched every Superman cartoon that I could watch, and that's what I grew up on. So if I were to say Marvel or DC, I'd say DC, but Marvel right now is probably
they're having a moment.
But no, I'm excited for the new Superman movie. I'm looking forward to seeing that with my son.
So how does Superman manifest itself in your role?
That's a great question.
Yeah,
that's a great question. So that's not one that I've thought about much. But if I were to as I think about it, and if I were to answer that, I'd say this job has to be this role, this profession has to be a selfless role. We have to be fiduciaries, right? We have to do what's in the client's best interest.
Yeah.
And as I think about Superman and what he stands for, it's not necessarily about him in his self.
Yeah.
Right. It's about how do I affect the greater good. In this profession, we have to put the best interest of our clients, of our society, of our communities first, before we think of ourselves. So that's where I think that manifests itself Superman manifests itself in what we do and in our business. If that makes sense. I think that
totally makes sense.
A stretch, but I don't know.
It totally makes sense. Well, folks, that's a wrap. Don't forget to like, subscribe, and stay tuned for more raw, real financial talk in the sandbox. Thanks so much for coming on my show today. It's been a pleasure to have you here, and I've really enjoyed listening to your story and sharing it with my audience.
Thank you, Herb. It's been a pleasure. It's been a real pleasure. I can't wait to do it again. Can't wait to do it again.
Absolutely. I can't wait. So